Okay, so this is going to be the recording from today's session. Today was Tuesday, July the 21st, 2026, and we're going to go over the short position that we ended up taking on the stream together in the Discord. I'll also go over here really quickly my bias for the morning and what we wanted to see going into the equities open. Okay. And so looking at the dollar index, right, we've been talking about the weekly time frame going into the 102s. Okay. So we've been looking for that 102 price to deliver. And, we haven't really seen anything break down ever since we closed body candles above our key levels. And so what we've seen last week coming into the V-shaped recovery of last Wednesday, July 26th, or excuse me, July 15th, 2026, was we've seen this candle dump, take out these traders here, 150 like level, right? And then we've seen Thursday sign of strength, second sign of strength, and then we've seen V-shaped recovery ever since, pushing back up into our key level and possibly above the 101.32, 101.40, 101.50 zone, which would probably push us higher when it comes to the higher time frames. Okay. Now, what we were looking for as we continue higher was we're looking for sell side liquidation. Okay. So when it comes to like futures indices, now we are somewhat in a bullish market still, right? Which we ended up having a really bullish day. So we weren't putting past the fact that we could, after we take profit on our positions, we could be maybe not in the right direction, right? The direction could still continue higher, even though we took the shorts at the equities open on NQ. Okay. So diving right in, let's go ahead and go over to, or let's go through the higher time frames here really quick. So we wanted to see more upside. So we wanted to see that liquidation. And then when you look at the higher time frame futures and indices, so your YM, ES, and NQ, or your US 30, SPX 500, and NAS 100. For me personally, I wanted to see more continuation at this point, even though I said like the dollar bias was to see some liquidation. I didn't feel like we were in zones of liquidation quite yet. I mean, we were during the New York Open position because we did draw on liquidity, but I didn't think that from a higher time frame perspective yet, like on the 4 hour for NQ and ES and really YM. I really wanted to see this high on week be delivered, a little bit higher here on ES, a little bit higher here on YM, but I wanted to see us push a little bit higher into these 29,400s, 29,500s for NQ. Okay, and so let's go ahead and go straight into NQ. Okay. Okay, so going into NQ here, we want to go look at the 1 hour and the 15. So looking at the overall, the 1 hour and the 15, what really stuck out to me when we came into the open was how the overnight price had played. Most individuals, I don't think they're playing inside supply demand. Okay, so they're not playing, I would think, below 800s. They're probably playing at a breakout above 800s. So a lot of individuals, what I like to look at when I come into the markets is what did the overnight player do? Because I don't play the overnight, I only play the equities open. So I'm anticipating what kind of New York Open are we going to get? Are we getting a bullish continuation? Are we getting a bearish continuation? Are we getting a draw on liquidity? There's lots of different things that can happen at that open. But like I said, seeing the daily had opened and had extended up in the overnight, and then going into my first check mark is going to be the London Open, right? Seeing where that London Open was going to be. And as you can see here, they set, which ended up being the trap candle slash demand candle that helped us with bullish continuations later in the day. They ended up holding this level coming into the equities open. So this candle here was 7 to 8 a.m. And then this is 8 a.m. to 9, and this is 9 a.m. to 10. Okay, and that's when we extended out and decided to push higher. Now, coming into the equities open, I showed you guys the bias that I personally have when it come to dollar. So I did want to see liquidation at the beginning. Now, the other thing that was really key for me when you look at the overall price, okay, like coming into equities open, before equities open, okay, this is what all we could work with. So all we really had to see was that we took the previous day high. We had a fast up candle, 815 going into 830. And then when you go study that same price on the 5 minute, this 825 candle going into 830, all you could essentially see was this. So let's go out of the 15 for a second and just look at that, the replay mode here on the 5, right? So like at one point before equities even opened, right, they had already created FOMO with that candle, 825 going to 830. and delivering, right, the higher time frame liquidity. So you're looking at this candle right here, okay, delivering that liquidity. That was a sign to me with a fast up move pre-equities open that the think about it like this, right? The overnight buyer has up a bag, right? And then sometime whenever they get up, let's say they didn't play the 2 a.m. or whatever, right? The 2 a.m. was here. Let's say they played in this overnight London here coming into New York. And so they're trapped, guys. Like they're pretty much to me, they're trapped. But the ones that had the best advantage were the individuals who were buying in that overnight and had the ability to trail risk up and secure the bag as the market made money available. Okay. Now, like I said, coming into this 825 to 830, this is what I was seeing. And so why I was looking for shorts because one, we had the bullish dollar and the overnight player I thought was liquidating some of their position that we could roll back into the range of 29,000. Okay. And so the position that we ended up taking was we ended up seeing our signal here, which was that 830 to 835. And then 835 to 840, we seen price come back up, and that's where we were able to play the shorts. And then our intentions were to see the price go down below 29,050 and probably get down into 29,000 and maybe back to daily open, but that's only if we weren't going to have a bullish continuation and shorts cover and we seen the rally push back up. Okay, so when we break down into the 1 minute, the 5 and the 1 minute, now I'll go over the entry here. And I also want to bring up the order here really quickly. Which was inside the Discord here. Okay, so inside the Discord, this is where we took the trade, 8:48 a.m. This is when I started dropping that we were in the trade. Okay, and so price had already come down, as you can see here, this first 5 minutes, right, 8:30 to 8:35, and then we had the 8:35 to 8:40 candle push back up, right, which is a beautiful sign that we wanted to see. So that 1 minute kind of comes down here, comes into those 29,150s. Then you see the shoot back up into the supply. Okay, so that's the shoot back up into the 29,200s. And then we've seen price fail to be able to break the candle that took out traders, right? And we've seen the 1 minute signal in that area, and we were able to define edge and risk on this part of the trade to then see, at least a 3R, 5R back down into the range. Okay, so that's what we ended up playing. Kind of looked like this at some point, and I'll kind of walk through what we ended up seeing and why we took it, and then I'll walk through, when these shorts covered inside that higher term from H1 demand. That's why you're seeing shorts cover and price just bullish continuation up. Okay, now this is a beautiful trade. Like I said, we were able to. I'll walk you guys through it here really quickly. There was other individuals obviously that were able to take the trade, and then. Yeah, then like I said, I'll go over the higher time frame stuff as well. So going back to where we were looking at here. Okay, so what we ended up waiting for was I ended up waiting for that first 5 minute close, right? So I wanted to actually see this is exactly what we were essentially looking at here as we on that 5 minute. We ended up seeing the 5 minute engulfing candle. Now, a lot of times in this type of setup, right, a lot of people get stuck trying to sell this at 29,180, or they try to sell it as it's pushing lower. But this is actually the signal, okay? So you actually want this signal, this FOMO move to happen, and then if price is really truly going to be bearish, where it took out traders here, all right, like it took out the traders here, it takes their money with this fast up candle here, okay? If this is truly going to be the area and they're breaking structure right here, they're most likely going to pull this back up into the area and then go down for the lows, okay? That's like if it's going to be the sell side move, okay? And so that's what we were looking for. And then when you look for price to, after we got that signal of the sign of weakness, right, the engulfing candle, all we were waiting for was we got the 1 minute break of structure, as you can see here, right? So like this little subtle move here is a break of structure when you go and actually like look at a line graph that's a lower low. So that was already the sign that we needed to see that price come back into what now? Our timing, right? We like first 15 minutes of the hour, last 15 minutes of the hour. If we're in bearish conditions, we like to sell at or above New York opening price, and if we're in bullish conditions, we like to buy at or below New York open. So in this situation, price had come down. This was the first 5 minutes of 8:30 open, and this was 8:34 to 8:35. And you get 8:35 going into 8:39, right? So that's that 5 minute candle goes up into that zone, and then it closes back in here inside the supply of like 29,190s. And then right here, 190s, this is where I started to call out the shorts, Okay, we were looking at, I really wanted 200s and I really wanted to get inside that 1 minute supply and as close as I could to that New York Open, but it had rejected the New York Open aggressively. And then we started to see the actual signs here where I could personally see it, and it was closer to the last 15 minutes of the hour. And so we started attacking here at 192s with about 20 handle risk. Okay, 20 handle risk, and we were shooting for a 1 to 3, but I really wanted to get below this low here, and I wanted to get below this low here, which was putting us, when you look at a 1 hour, okay, it was putting us into this trap candle supply, 29,074s, if we could get into a little bit lower than this candle here on 15, okay. And so 1 to 3, 1 to 5, but I was really looking for, like I said, that 1 to 5 to deliver, and that's what we ended up getting on the stream. And so I'll bring that back here really quick, and just show that that's the area that we ended up taking, okay, which was those 29,192s with a 20 handle risk. As you can see here, my risk was, or my entry was 29,192, and then my risk was 29,211. So really about 19-point risk, but it needs to be, it's about 20. Okay, so I'm just trying to frame up that box and frame up that zone. And then as you can see here, I started with 4 contracts on this trade, so I had about $8 a point with 20-point risk. Okay, so it's about $160 risk at one point, and then we were able to at this zone here, this was already giving us, from 192s down to 100. That's over 60-point gains, so over 3 times the risk. So I ended up pulling 2 of the contracts once we slipped this low here, and then I left 2 remaining for the runners. Okay, and then we ended up getting I had the 2 contracts running. I ended up sliding some of that 1 contract down just to secure more of the bag, and then I ended up letting 1 runner run, which we ended up managing until the short started to cover and price started to reclaim and go back the other way. Okay. And so we'll go back to where we ended up finishing that. Okay, so we ended up pushing this down. This ended up coming into our special time where we see reversals or we see price completely just fall out, which is going to be 9:05 into 9:10. Now, the one thing that was really, that really helps me understand short covering is like when you're in a position, where you're going to place your risk. And I think one of the biggest things that I seen here today was, we were able to win on stream and we were wrong on direction, right? But the one thing that I did see that was really key was that our absorption bullish continuation bias play did play out, and it played out at the right time. Okay, so I'm going to walk you guys through what I call easy money plays, right? So there's, even though I take a certain trade, I'm able to produce a profit and manage the trade accordingly, there's still plays that played right into our hand and right into our bias. It was just a little bit harder to see for that day. Okay, so coming into this trade, right, I like how this comes in here. Not first 15 minutes of the hour, last 15 minutes of the hour. 9:05 to 9:10 has been a really, really hot time for us. Now, when you look at the 5-minute here, we weren't getting any signs of strength here. This was just, lower lows and lower highs, lower opens and lower closes on 5-minute bars. But now, guys, like I always talk about, when you're getting short covering, you're going to get specific patterns and signals amongst players that play this asset. Okay, and so 5-minute sign of strength right here pretty much was showing me, like I said, if you took shorts where we had originally took shorts like 29,200s or anywhere like that, that they weren't really wanting to go lower than that 29,050, and that they were essentially holding, right, the 29,050 was the area I was talking about here, but essentially they were holding this breakout trap candle. Okay, and so to me, what that was looking like was more bullish continuation from what we had talked about pre-New York. Okay, and so now what you're looking at here is the RSV model. Okay, like when I see a beautiful RSV buy model, there's a couple things that I see. I see sellers that are trapped, right? And then I see sellers that are getting ready to short cover, which is going to make buy orders fill fairly quickly, okay, and give a layup trade. Now, as soon as we got this 5-minute sign of strength, now I'd be looking for, as soon as I get this 5-minute sign of strength, I'm looking for a target, right? So where are those trap sellers? And then I'm thinking risk to entry, and is timing going to play out for me to find a 1-minute mitigation inside the demand candle? Okay, so this is a signal. First thing I'm thinking right here is, where's my target? New York highs, right? So New York highs or even New York open, right? Because you're going to protect or pay yourself at point of interest, but let's use New York highs because that's what we used on stream. All right, so you draw the line. Now my eyes see this when I'm trading live because I've done this same pattern so many times. But 5-minute sign of strength, most people get chopped up trying to guess when this is going to actually happen. Let the 5-minute candle close with strength, and then wait for timing, right, to identify the 1 minute mitigation. Now, this kind of slipped outside of the first 15 minutes, last 15 minutes of the hour. But when you look at that second candle, like when I watch this RSV sequence, there's always the signal. And then the second 5 minute candle, there's the 1 minute mitigation for you to play back up to your target. Okay. Okay, sorry, I just had got a message. So now timing was right. Signal had presented itself. Okay, we were already out of shorts at this point, so you could have been possibly finding buys, but we were already done for the stream. But I'm just showing you guys the better RSV model that ended up playing out after we had already closed that position. Okay, and so 5 minutes on of strength. I'm wanting to see price come down into where now? The special candle, the 5 minute special candle, which is going to be here. I don't want to take the trade until the 5 and the 1 minute align and come back into this area. Okay. And so we're going to use that. Now we're going to go to 1 minute and do replay mode from there. Okay. So from this point, okay, where a lot of people get trapped once this candle prints, I'll do this really quick. Okay, once this candle prints, is they buy it as it's pushing up. You want to be buying when the market's crashing, and you want to be selling when it's taking off. So what do I mean by that? Right? When you plot an entry on a 1 minute, let's say you took the entry at 9:14, that first 15-minute window, because you just wanted to fit it inside that window. Okay, so you took the entry right here. Now, if you're inside that 5 minute location, not a bad trade, but because you didn't have the signal yet, you needed the 5 minute signal, you're not on the right side. That's what makes people get stopped out, if that makes sense. Okay. But if you let the 5 minute signal go, okay, like you have here, and then you're able to take the trade in the 1 minute demand zone, and then you want to take that under the 50% of that 5 minute candle, right? So when you're looking at that 5 minute candle, you want to be like halfway under it, like here. So you want to be like 50% of the candle, and then you want to be framing up the 1 minute and 5 minute edge. Okay, so I'm going to move this line because this line is taking us to the target and where we want to get to. But now, like I said, what you want to focus on is you've got your signal. So 9:10 to 9:15 was the signal. Excuse me, 9:10, yeah, 9:10 and 9:15 was the signal. Now you're thinking from where's the edge of the 5 minute, 15 minute low, okay? And then you're waiting for price to come back into the one or to the 5 minute demand and then frame up on the 1 minute to then take the trade, okay? So how do you think from risk to entry, okay? Well, if you're already knowing you're going to frame up your trade under the 50% of the 5 minute candle after this sign of strength candle, then you're already framing up your 1 to 3 or 1 to 5, and you're taking your risk, right? So where's the low on the market right now? The low right there is 29,063. So you're taking your risk and you're making sure that, my purple box is my risk. So I'm just aligning that 63, okay? All right, 63. Let's just do it right here. 63. I'm aligning that 15 5 minute low, and I'm thinking from risk to entry. Okay. So now when price comes back down into this zone here, right? Even though it's nine, 50, what is this? 9:15 going into 9:16. This was a beautiful trade, right? To buy with a 20 handle risk, and then you're attacking back up to either New York Open because it does get a little choppy, or you're taking out those New York highs for at least 8 times your risk, or like I said, if you played back to New York, you're looking at like 7 times your risk on that trade there, okay? And this fit the model, okay? So when you take a trade like this, right, when we go back and we look at this area, let's say you took this let's say hypothetically, because most people, how they're going to take this trade after they get the sign of strength is going to be usually on the breakout, okay? So now most people are taking that trade once it breaks out, right? And they're wondering why they're getting stopped out right here at the 9:21. Well, because look, like I said, if you take that trade and you really focus all your energy on getting your trade inside the 5 minute, if you're looking to your left over there, inside that 5 minute demand, if you're at least focused on that, then when you take the trade, you can think in probabilities, right? Because you're in the right location. Right, so now if that trade goes up like it does here, 919 going into 920, and then comes back down like into 925 and then extends up, right? Because you positioned yourself in the right area on the 5 minute, on the right side of the V, and you're attacking shorts, stop losses, right? And the short covering quickly, and you're in alignment with the bullish continuation on H1 and H4, right? You're able to take advantage of this move, and this was a really, really nice short cover move that bounced back and took out the New York shorts fairly quickly. Okay, so went over the move that we took today. Again, like I said, I ended up taking shorts. I showed that move was here. Okay, took the shorts right in here. Um, it was about, I think, the 192 is where I called it. I called it at 200s, and then I ended up taking like the 192s. We ended up producing 5 times our risk on that trade. As we started to exit that trade, okay, that's when we started to see like we weren't getting the move down for our shorts to really capitulate down to 29,000 and really attack that H4 and H1 level. And that's where we were able to see, like I said, if I would have been a little bit more on it, maybe on like on futures, I'd take that flip back position. Okay, so like when we start our right here when the signal was presented, we ended up trailing our risk down on those shorts on our remainder. And when that signal was presented, that's what took us out of the remainder of the shorts. So it actually, like I said, in that next candle, 915 going into 920 would have given us a shot to, 20-point risk for 100 or 60-point gain back up to those 29,250s. So pretty good trading. Like I said, management worked out really well. Seeing the structure break, seeing the pullback to the area, seeing the 29,200 acting as a level supply, seeing how they um, had basically taken out traders, right, with this candle here, stop losses, right? So they took out traders with that fast up candle, and we were able to capitalize on that. So it's not always about being right? It's about executing on when your edge presents itself, okay? And so beautiful trade down, and then I think the short covering to me personally, like when I go back and I'm able to look at it subjectively now, I think that short covering move was beautiful, okay? But it was just engineered very difficult. So, looking at really quick ES, I wanted to talk about that from the pre-market as well. When we came into the overnight, or from the overnight, right, this was going to be the equities open right here, right? So what they did was they really engineered, like on ES, they engineered these equal highs, right? That and know people like us are going to come after those type of trades. And the very first candle, right, as you can see here, this is New York Open, they capitulate, make the lower low, trapping people to sell even more, right? So what do you think people did when they took this trade here, right, at the equities open? They pressed sell, right? And then they put their stop losses where? They put their stop losses in alignment with the double top, thinking they were going to get down to daily open, right? And all it essentially did was uh, algorithmically shift back and go take the double tops. So they sold that position. They probably put their stops here. Price makes the lower low, so they probably go break even, right? Just to like hold the trade as it's going lower. And then first 15 minutes of the hour, last 15 minutes of the hour, right? Algorithmic transitional price. You get 8:45 into 9 engulfing candle, and then you get 2 more candles, so 30 more minutes of just explosive upside out of those 75.13s. And as you can see, at the same time, right? That's when the short, like this 910 and 905. So let's go to 5 minute here so we can see this together. But this did really help out with our short cover today, and then understanding that they had this shelving on ES is why I knew that they were going to cover and go higher. Okay, so when you go, I'm going to move this really quick. When you go and you look at the 905 to 910, right? It's kind of tricky, but they're still holding the candle right here. So I'm like really focused on this candle right here. And then when you look at 910 to 915, 5 minutes are pushing higher. So let's see what 910 to 915 looks like on here. So we are moving higher on NQ, and then 915 going into 920. If you notice, that's when we get that subtle break of structure here, right? Higher close on that 5 minute body on NQ, right? And we are making our way up on ES to the double top, which is kind of leading us to this higher time frame area. Okay, and so definitely use ES because ES is going to help you. And like I said, that definitely helped with us with understanding that if we didn't just see capitulation down to market open or daily, that we were going to see some short covering through those highs. Now, where they also made it very manipulative as well was that they made these lows down here look really good. Okay, so like your H1, this was your low, right? 74, 73 flat, right? On this wick low here. And then the low on this candle here was 74, 73 flat. So they made double bottoms. So this could become a clean target on ES here, like, in the next few days, as we maybe buyers liquidate their positions, because this was very manipulative on how they did this today. Okay. So that'll pretty much finish my, rant when it comes to what we're going to see for NQ. Now going into tomorrow, right? Like I said, my main focus is going to be, expansions on the way up. Our key level, obviously 29,000 that we have. Our most recent demand, which is going to be 29 or 28,800. So if we do continue to make our way up, one thing I'm going to be looking at tomorrow is how the overnight plays and how we look when we come into tomorrow on the 4 hour, right? Do we make our way back down? Okay. Like, do we make our way back down? Let me show you here on the 1 hour. Do we make our way back down into the range, right, and fill some of the FEGs from yesterday, and then maybe sell off and go attack the wick? Or are we going to come back down and reclaim inside that 29,000 and maybe start to see some more buys that eventually can reach through, okay, which I like these, last week's high and some of this liquidity on that 30,100, okay? We shall see. I'm not going to predict, but I appreciate you guys watching the recap. We will be live again tomorrow morning, same time, same place. And we're on a pretty good streak on the streams, right? Since last Friday when I got back, or whenever I was trading last Friday to Monday, we had a pretty good day. Then today we had a pretty good day. So tomorrow and the next day, if we have pretty good days, we may take Friday off. It just depends, okay? So appreciate you guys. I'll talk to you guys on the next one. Have a good night.